Let's just look ahead today. You were always we're focused on moves on the day ahead. I know you, like many other investors, are looking at Jay Powell's speech later today. How important is it for the markets in your mind?
Frank, that is the most important economic event of the week. We've seen for the past 2 weeks, one Fed speaker after another coming out and saying in no uncertain terms that the bond market has been doing its work for us. And if the Fed chair comes out today at the New York Economic Club and echoes that same chorus, I think it could signal the unofficial end of the rate hike cycle. And what's important for us to kind of conceptualize is that's what the stock market is expecting. That's what the stock market is pricing in, Frank. And it explains the resiliency that the stock market has shown, even in the face of tremendous headwinds. So I think you could see a little bit of a run-up on that type of dovish speech. However, on the other side, let's say that doesn't happen, and he leaves open the idea that the Fed is still potentially going to raise rates again before the end of the year. I think that would be a short-term catalyst that would disappoint the market. Maybe long-term, one more rate hike isn't the end of the world, but I think it would disappoint the market today.
All right, so Kevin, important to know, while we're talking, the NASDAQ's creep back into positive territory very slightly, but just back into positive territory, and the Dow and the S&P, they're off their lows of earlier this morning. So we're talking about higher for longer, the rate impact on the market. With all that in mind, what is your WEX word of the day?
Resilient. And the market has been resilient. I know we're off of the September highs, but seriously, Frank, if you look at all the things that are negative, high energy, still high inflation, a horrific attack in Israel, uncertainty in Washington, in the face of all of these things, the stock market continues to be resilient. And that resiliency lies in the belief that Wall Street believes that the Fed is done raising rates. And they can't cut. They can't be higher for longer until they're done raising them. So all eyes will be on the New York Economic Club today at noon.
Kevin, that's a good point. They can't cut them until they stop raising them. Excellent point right there. So while we're looking at higher for longer, again, we've been talking all morning long about the 10-year yield hitting just about 5%, just a hair or two below. Pretty competitive for dividend-focused stocks. I know that's one of your area of expertise. So right now, at least in the short term, are you looking at short-term bonds, or are you still focused on dividend-paying stocks?
Well, we're always looking at dividend-paying stocks, but the difference for us is we look for dividend growers, and that's the inflationary hedge that lies under the surface. If you own companies that are increasing their dividends every year because they're increasing their earnings, you really are talking about a hedge against inflation. If you're locking something in at 5 or 6%, as great as that is, comparatively speaking, for the past decade, if you factor in, say, a 3% inflation or even a 2% inflation, you're getting a 2 to 3% real rate of return, which is way better than you've seen for, again, the past 12 years. But there's no inflationary hedge against it. So although I'm sure investors are appropriately going to be allocating between stocks and bonds feel a whole lot better now, for us, it's always about dividend payers and, more importantly, dividend growers.
All right, so you say the Jay Powell speech at noon Eastern time at the Economic Club in New York, that's the big moment for the market for the entire week, but especially today. So how would you play today? Would you make any moves before he speaks? And if he is as dovish as many people believe he is going to be, what would you do after that?
Yeah, so I don't think we want to do anything before then. If we do get a dovish speech and the market rallies, we're going to look at an opportunity to write covered calls into that strength. We wouldn't expect a massive rally because, again, that's what the market's expecting. If instead we get a hawkish speech and the market pulls down, then there's a few positions that we've been adding to that we feel are grossly undervalued, and we'll be buyers of the market in the afternoon if there's a sell-off.
All right, give us a sense. What are those picks? What are the positions you think are undervalued?
I think the stock that we're looking at today specifically, Frank, is UPS. Ever since the last quarter earnings and the deal with the Teamsters, this thing's been under tremendous pressure, and I think Wall Street has it wrong. I just think that they've oversold this stock into what I believe is a mistaken outlook. This is a company that increases their dividends by 13% every year for the past 5 years. I mean, that's been very consistent. They have 2% share buyback scheduled for this year. We love that. And the dividend's over 4% with a 13 PE.